Good afternoon and welcome to IR Insight Live. I'm your host, Ricardo Estrada, and joining me today we have Josh Ellman, Senior Analyst for Nasdaq IR Solutions. Josh, thanks so much for joining us.
Thanks for having me, Rick.
So it's been a while since you've been back. I think the last time you were on, it was around World Cup time.
Yes, that's correct.
So I think this time around we'd like to focus on the consumer and maybe touch on earnings, if that's okay.
Yeah, absolutely. That sounds great.
All right, so can you kick things off by explaining to our viewers how the consumer is feeling at the moment and maybe highlight any trends that you and the team are seeing?
Sure. So the consumer is doing quite well. We recently received second quarter GDP information that confirmed a lot of suspicions out there that the consumer has their foot on the gas pedal in terms of spending. Tucked into the second quarter GDP figure was consumer consumption growing at 4% in the second quarter. So very solid reading during the second quarter of the year. And we can thank some of the tax reform for that. As well as strong job growth. Wages are starting to creep up a bit. They're not necessarily going gangbusters at the end of the day, but wages are becoming stronger and stronger. And also, too, the consumer in general is feeling very confident. So all in all, it was a very strong second quarter for consumer spending. And that dovetailed really nicely into what we've seen thus far in terms of second quarter earnings.
On earnings, how's it been? How's it been going for corporate issuers?
Yeah, so within the retail space, we are kind of in the bulk of the peak time for reporting for retailers, and retailers in general have been reporting very strong results. We've seen a lot of strength in the top lines as well as in the bottom lines, but we're also seeing solid numbers and figures when it comes to overall comparable sales. So in general, I would characterize the results as healthy and confirming a lot of the macro data that we had throughout the second quarter that showed that the consumer was willing to spend, and it obviously showed up in the results of a lot of the retailers. Now, what I will say is expectations were really high going into earnings season. So if there was a particular issuer that had any noise around margins or any potential slowdown during the second half of the year, then that particular issue may have gotten hit around earnings. But at the end of the day, I'd characterize the results that have come in thus far as favorable and setting up us quite well for the rest of the year.
Okay, and my final question for you is, for the last half of the year, what should IROs expect, or what should they be looking at, as we approach end of year and into 2019?
Yeah, so like I said, the retail space has been on an incredible run. If you look at the XRT, which is the ETF that tracks the retail space, that's higher by about 13% on the year. If you take a look at the S&P Retail Index, that's gained about 31%, but that includes Amazon and Netflix. But in general, the retail space has been outperforming the broader market as a whole. And I think, just the data points that we are seeing, we will continue to see strength amongst retailers. That being said, the most recent macro data has shown that the consumer is potentially taking their foot off the gas pedal slightly. The latest consumer sentiment report showed a decline in consumer sentiment and some concerns around inflation. And we've seen a little bit of a pullback overall in terms of retail performance versus more defensive-oriented names. The defensive-oriented names have outperformed maybe in the last month or so. So I think there's a little bit of a let's take a pause and a breather type of approach when it comes to investing in the retail space, given how much we've appreciated this year. But at the end of the day, there is a lot of great commentary coming from the retailers and a lot of heightened expectations. In fact, we recently had the National Retail Federation up their forecast for overall 2018 retail sales to at least 4.5%, and that was up from a range of 3.5 to 4.4. So they have elevated their expectations. A lot of economists and macro players foresee third quarter earnings at about third quarter GDP at 4.3% of growth. So I think at the end of the day, we will continue to see some strength, but there are some headwinds as we look towards the end of the year. Yeah. And when I mention headwinds, I'm talking about inflation. So we've started to see a pickup in inflation. Specifically, we've had 2 months now that has shown year over year inflation of 2.9%. And again, like I said before, the consumer sentiment survey had pointed to consumers mentioning that they were concerned about recent inflation.
Got it.
And obviously the Fed
Which will affect them spending, correct?
Exactly. So a lot of the times as consumers, and we're seeing this in the used car space right now, consumers will pull forward their spending because they're concerned about prices creeping up in the later time period. So there's going to be more noise, I believe, around that on the consumer level. Yeah. And then when you look at the company level, there may be some margin concerns regarding labor because wages are continuing to rise. Fuel costs and logistics, the cost of shipping your goods continues to rise and grow. So there may be some potential headwinds out there that may take a little bit of air out of this rally for the retail space. But thus far in 2018, the retail sector has hit it out of the park. And it's, the earnings thus far that we've seen has confirmed that outside of maybe a few names.
All right, Josh. Well, I think that was a good update. I think for the next time we have you on, maybe we'll have you update us on where we're at towards the end of the year.
Sounds great.
All right, well, there you have it. That was Josh Ellman, Senior Analyst for Nasdaq IR Solutions. If you have any questions or would like to learn more about Josh and the insights that his team provides, please visit business.nasdaq.com. Thanks again and see you next time.